I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I got back into Shop Microsoft. I added some Neo. Cool, we got through the disclosures. Watching this crowd strike real close here after hours getting hit. 116 has a real big refreshing seller that's dumping when they test it. Curious to see if we can get a little pop here on this break. Getting totally clobbered on the Q4 rev and EPS estimate miss. But it feels like 17% down. It's kind of a lot for that miss. Did we know what the options were pricing in? I'm sure Pat talked about it, and I got distracted by the chief of compliance when Pat was chatting and missed part of it. Oof. That was a nasty little market order sell there. Curious to see if that 116 seller's at 115 now. 113 is these after hours lows. $5,000 share offer at 60 cents on ARCA. They printed 1,200 of it. I don't have depth for ARCA anymore. Looks like he stepped down. Ooh, there, no, he was still there. It was the second guy at 50. Yep, someone's driving this bad boy down. Priced around 13. Wow. Another little market sell. 5K came in on ARCA at 114 on the bid. 5,000 shares. They hit half of it. Size it up to 6,000 shares. I'm so tempted to nibble a little of this to the long side, which I'm technically not allowed to do if I'm streaming on YouTube. When that little buyer came in and resized there at 114, had me interested. 114.23 ARCA got filled. Get bought back to 140 tomorrow. That seems like a stretch. I don't think this thing belongs at 140 after that earnings report, but I am not confident it belongs at 114 either. We have seen that happen a lot. Yeah, I agree with Josh on this one. Let's start if they can recapture that 120 level, which is the pivot low on the daily from November. Let's see if 114 sells. It cleared out the 2,500 shares posted on ARCA. I want to see if there's more liquidity behind that on ARCA, and they didn't test it enough. They just kind of they cleared out the 2,500 shares and maybe printed another 100 shares. No real way to know if that's still the refreshing seller on the tape. Smoke show. Well, this is the most entertaining thing that happened all day today. I want to see if this 114 sells on ARCA. Yeah, 3,000 shares just went off there on ARCA. It was only showing like 1,300 shares. So that ARCA seller, it could be the same seller that was at 116, selling ARCA 116. Now ARCA selling 114. Printed more liquidity than was shown. I like that 99 is selling in front of 114. Sometimes that's a trader that just wants to come in and risk like a couple pennies off of another seller, and then takes the whole thing out. That ARCA 114 sized up to 2,500 shares again. They just through printed some of it. The 99 dumping on EdgeX in front of the 114. The 114 sized up to 6,600 shares. That's interesting. You don't see that much. Is Workday out? Looks like CrowdStrike is where the real fireworks are. Ooh, that 114 broke when I wasn't looking. That's what happens when you take your eyes off the market maker. 114.23 selling on ARCA, but that broke. That 114 break could have been the spot to try this thing, unless that seller comes right back in. But manage your risk. Oh boy. Oh, those downticks are gross. $113 was lows. Oh my god, didn't even attempt to hold that 113. Somebody just like market sold, crossed the bid and just wrecked that thing. It's 113 selling ARCA now? Yeah, look at that. 3,400 shares went off on ARCA. That wasn't posted. That seller is still here. Palantir's all government contracts, though. $112. See ya. All right. Let's shoot over to our meeting. Let's shoot over to the meeting, even though there's not much to talk about. Today was like a brutally slow day. I don't know if anybody else felt that way. There's some okay price action early on. How do we end up closing? At least as of right now, including I think a little after hours downtick. SPYs are down 0.2%, so very small. Qs are relatively weak. Qs are down 0.85%. Well, I don't have a voice today. Qs are down 0.85%. They're down like almost 50 cents after hours, though. Not being helped by earnings. And the Russell finished green. The Russell finished green. That was where the strength was. So, keep this CrowdStrike on my other screen under the corner of my eye. So yeah, I mean, look, there was a chance here this morning for bulls, and going back to I guess the big picture daily chart here. What I was saying in the morning meeting and kind of echoed what I was saying in yesterday's afternoon meeting is yesterday's candle's no good. Yet that VIX had been a real big problem. The VIX had gotten down to 20, which has been a sell the market situation all year. UVIXY was extended to the downside into it. We were really due for a VIX bounce, and in some ways, yesterday's bounce wasn't even enough. The frustrating part is that this UVIXY is still red today, even though the market did not give any sort of bounce. I really want this VIX to be kind of correcting a little bit. If you're bullish, you honestly want this VIX to be correcting a little bit, especially if you could do it with the market not really breaking down, or even with the market giving a little bit of a deeper pullback, as long as we hold key levels. So, I certainly have my concerns about this market. I have to let the technicals dictate everything to me, and while we're still within the realm of this smaller time frame daily chart uptrend, I want to keep that term cautiously optimistic, but the caution part is still the big key. VIX into $20 and extended into that with a massive downtrend line here for the market that's been going on all year on a big picture that we just retested it again as we approach this declining 200-day. This rally should fail, honestly. It should fail. The flip side of the argument is maybe they make it a little bit tricky this time. Maybe they overshoot it, especially we got seasonality here into the end of the year that tends to be a little bit more bullish. So, with all that said, yesterday's candle was also really not great. So it doesn't really set us up for confidence into a gap up this morning. That's what we initially had. We had a very small gap up this morning. It was a little bit bigger pre-market. We lost some of it when I was doing the morning meeting. I think the Qs were even like flat to red when I was doing the meeting, and the SPYs are still trying to hold up. But then when the market actually opened, the thing that gave me that made me feel best was how this IWM was trading. And I remember looking at it, this was like the complete opposite of yesterday. If you guys remember yesterday, here, The second 5-minute bar and third 5-minute bar for the IWM are this deep pullback, whereas the second 5-minute bar and third 5-minute bar, the Qs, were just continuation of great strength into a gap fill before the whole market fell apart because of the Fed speakers. This morning was the complete and utter opposite, and that's actually what I prefer, because so often this year we've seen that the IWM has been the leader for the market. So this morning, look at this initial move here for the first hour of the day in the IWM from 9:30 to 10:30. It's just fantastic. The Qs are not confirming it, and certainly what I want is all the indices, all of my layers of probability to confirm an up move for me to have maximum conviction. But if I've got to choose strong Qs and weak IWM or strong IWM and weak Qs as a bull, what I'm going to choose is strong IWM, because what tends to happen, and it certainly kind of happened yesterday, is when the Qs are being strong but the IWM is failing, a lot of times that entire bull rally that you might be looking at for select issuances or for the NASDAQ ends up failing. And the opposite is also true, though. When that IWM is really holding in well and is trading well, and the Qs are not giving the same confirmation, it seems like there's been a higher probability, at least this calendar year, where the Qs themselves eventually turn around. And that's what I was thinking this morning. This first hour move in the IWM was just fantastic. The SPYs were doing nothing. They were just not really participating. They eventually kind of broke up and broke the highs. And then the Qs were the real laggard here, and they were making me most nervous. But I got pretty excited at one point today around 10:15 because the IWM was still performing well. The Qs had just broken down to the low of the day with a kind of a negative Maribozu, a penalty box bar, or whatever we want to call that, but immediately negated it and got back above. I was like, oh wow, they just shook some people out to new lows. They negated that negative Maribozu candlestick. They got back above. We're working our way towards highs. The Qs look like they're actually starting to clear up. The IWM has been trading great, and the SPYs are making highs and improving also. So, things were actually looking, honestly, pretty good here around 10:30. And then the bottom just fell out of this market, and I don't really know if there's a why behind that. I don't think anything fundamental really hit at that time. For once, we didn't have a Fed speaker speaking. The bottom seemed to just totally fall out of this market at 11 o'clock. And there was an Apple headline that hit. That was like a negative Apple headline. But negative Apple headline, I know Apple's such a massive weighting in the SPYs and the Qs, but was that enough to really wreck the entire market back down? I don't know. So I guess a little bit of an Apple headline hit, but beyond that, it seemed more just technical than anything else. And it was just a total failure of this market. And then the whole rest of the afternoon was super boring. We had a little bit of a wake up at 2 o'clock that I thought was interesting. We were kind of getting above these highs, but it goes back to the same concept of that penalty box concept, of that guilty until proven innocent concept. You had to negate the 11 a.m. bar for this market to become innocent again. And whereas this was a pretty good bounce back in 2 o'clock, it certainly could have given you some reason to hope if you're a bull with this little volume pickup here. We never were actually able to negate the negative candlestick that came in at 11 o'clock that could have put this market back into more bull territory. So that just ended up kind of just being nothing, and this entire afternoon was nothing. This was one of the more boring afternoon sessions I can remember, honestly, this year. I was like bored to tears at one point this afternoon, just trying to make sure that I wasn't over trading or pressing buttons where it wasn't necessary, as this market was just kind of in this chop with no real rhyme or reason to it. Jerome Powell's going to be speaking tomorrow. I know some of you guys are chattering that maybe the market just wants to wait for that. Maybe. But for the most part here at the end of the day, there wasn't too much to bite onto with today's trading session, and the big picture really hasn't changed. We still are in that same mode, that same, I think, cautious optimism mode, where we understand what our headwinds are technically, the big picture downtrend, the declining 200-day, the location of the VIX, the extension on the VIX, which has been satisfied to some degree. But at the same time, we still haven't really broken any key downside levels where you can start feeling a lot more bearish on this market. The SPYs are still above this important 390. They're still above the CPI low. The Qs very close to losing their level, though. And that's what when the Qs first broke 280. 280 is the level I'm looking at here in the Qs. So it's like, oh boy, my SPYs are still intact and my IWM is still intact, but my Qs are losing it. And it has to be on a closing basis. So the Qs still managed to close above 280. We closed at where did we close today? My level 1 information is not giving me the right price. We closed at about 280.50 because we're trading down like 20-25 cents here after hours, so we're barely above this 280, which is I think a big key line in the sand. If we lose 280 on a closing basis, the Qs go from being kind of short-term bullish to neutral. But our SPYs and our IWM are still above our kind of key levels there, where they're still able to be short-term bullish. Though this IWM does not look great. I guess it's kind of a grindy uptrend here, where you're testing this uptrend line. And I'm not a big line drawer. Anybody can kind of just connect dots. You learn how to do that when you're like 3 years old with the trend lines. But you got this low to the absolute low of the year. That's kind of being tested a little bit for the IWM. So IWM gave an inside day today. Very boring. SPYs have a little bit of a downside tail. Maybe it's signaling a pivot. And the Qs are weaker, barely closing above 280, and if they lose 280, it becomes a problem. We'll see what happens when Uncle Jerome Powell speaks tomorrow. If the other Fed members are any indication, he's probably going to come out and continue to use hawkish language. But then it was interesting when we did have that one little market uptick today at 2 o'clock. And maybe someone can help me understand this a little bit better, because I read the headline and I didn't really research it, and I almost want to actually find it here in the VTF to reread it out loud. It's from 2 o'clock. I'm scrolling up to 2 o'clock to try to find it. Right here. So 2:04 p.m. Fed releases minutes of October 3rd to November 2nd discount rate meeting. Discount rate meetings. Kansas City, New York, and Philadelphia Fed directors favored a 50 basis point discount rise, and directors at 9 Fed banks sought 75 basis point discount hike pre-November. So this is the discount rate meetings. That's different than the normal Fed meeting minutes that already came out, right? This is specifically for the discount rate. So are those different Fed members here than are the normal Fed voting members on? I'm asking this because I don't know. That's different from the normal Fed voting members that obviously vote on the increase or lack thereof of the Fed funds rate. I don't know. So that was kind of interesting when that hit. It gave the market an uptick, and what I can't help but wonder when I hear just how hawkish the language is from the Fed members yesterday, and as I'm a little bit nervous about Powell speaking tomorrow, but at the same time I read information like that where 3 Fed members already even for the last meeting wanted 50 basis points. It just really kind of goes back to my thought process on the Fed knows and understands that they can't hike to 7% like Bullard keeps talking about, because they're just going to slam the brakes on the economy in like a really, really dangerous way, and there goes your kind of soft landing. But they, at the same time, are recognizing that they need to pause, that inflation is starting to move in their favor. And it seems to me like they know that they need to pause, but they don't want the market to go up on it. So their words and their actions are becoming kind of two different things here a little bit. Maybe not Bullard. Maybe his words and actions are the same. But that's kind of what I'm starting to see here a little bit when I'm reading through the lines. Is we know we need to slow down, but we can't tell the market that because we don't want the market to go up, because then that creates the wealth effect that's going to increase inflation again. So yeah, it's a really interesting time. And like I said in the morning meeting today, I wish the CPI number in our next Fed meeting was like at the end of this week already, or next week, coming up really soon. I don't love this price action that we've been dealing with for the last 2 weeks here. It's been really tricky. And I don't know if we need that CPI to come out to resolve that. Because we're in this just super interesting spot here where we are pushing against that downtrend line and pushing against that VIX 20, and are we going to be able to break up or not is the big question. So I don't know, and you might need the next catalyst in order to do it. Like what if the CPI number was tomorrow? Let's just say. And obviously, Jerome Powell is going to be speaking, so that's going to have an effect on things as well. I think somebody mentioned that they're pricing in 50 points of movement for the S&P, so you could see, SPY 400 or SPY 390 tomorrow off of that. But when I'm looking at this market in this really interesting spot here where these different forces are coming together, and I think about what can resolve this market, or will anything resolve this market, which by the way will also create a better trading environment for us. I wonder if we actually need that next level of news to really hit. And if we have another super light CPI number that hits, we start really clearing above this 200-day and clearing above that big picture downtrend line, and you're looking at SPYs at 407, that could actually really set off the next feedback cycle of buying that could come into the market. Which again, that's exactly what the Fed members who are really focused on bringing inflation down don't want. I think what the Fed members want, and I've actually been saying this all year. That's good information there, Mike. Is a sideways market more than anything else. They want to manufacture this sideways market where the market doesn't go up so much that people are feeling rich and they go out and spend, but doesn't break down so hard that it causes everything to lock up and that we go into a hard landing recession. And they're really trying to navigate that fine line. And honestly, in some ways, they're doing a good job of it. But on the other hand, I really wish that they would stop talking so much. So that's pretty much all I got. Trade of the day today was Geo. Oh, and Mike reminding us that the PCE inflation is Thursday, and that's one of the Fed's preferred inflation gauges. Really good information. So Geo, trade of the day today. I was looking long versus $10.50. I didn't get involved in it. I didn't want to pay up too much. I thought about buying this pre-market as I was going into the morning meeting, and I was like, I'm just going to wait for the market to open. And then I didn't want to pay into the 1080s on it. It was trading pre-market in the 1060s. I wanted to be long versus 1050. And it just opened up in the 1080s pretty much and just immediate liftoff. So fantastic opening drive trade for anybody who caught it. Then it gave this beautiful bull flag in here. And by the way, this is what I was talking about at one point when the market was open. With these bull flag patterns, this is why we want that ADMA to catch up. If you're just looking at these next 4 bars after the first positive Maribozu came in, and this thing obviously is super strong, it's going sideways here, it's building out the bull flag, but even by the 950 bar, look at where the stock is trading versus where the ADMA is trading. So what tends to happen when you've got this degree of extension, even when you're going to get continuation, is they shake out first. So if you're looking to trade a bull flag, you want to be very cautious not to get involved too early and just throw your stop out at this low and expect not to get stopped out. Because it's very normal that bull flags give continuation as the ADMA catches up, and it's also very normal that they shake out whatever the low of the flag is before they go. And that actually makes the market go up even easier because the weak-handed short-term bull flag longs from these bars get shaken out, and now they're not going to be able to sell, or they have to rebuy the stock, and then it continues and the momentum comes in. So GEO here, definitely the trade of the day. A little bit of a deeper pullback here, but closed tremendously well. The other one that was pretty good, but then eventually stalled out, was this Unity off the open, which is one that you guys keep bringing up in the morning meeting every day. So keep doing that. There's been a bunch of good trades in this name here. I don't remember what price I said. I think I said 35.80 in the... No, maybe not 35.80. I don't remember what price we specifically discussed in the morning meeting for continuation. I think I had an alert out for 36.25, and 36.40 was the spot. So here's that break of 36.40 on the first 5-minute bar. You had a pretty wide-ranging inside 5 as the next candle. We talked about taking a cheat on that inside 5, actually buying it early, and that gave fantastic follow-through. And then the market, took that big hit at 11 o'clock, and the stock kind of stalled out and eventually broke opening lows and failed. But that was a pretty good opening drive trade, and definitely the type of strength that we want to be involved in early. Looking at a lot of the Chinese names today, we're looking at this Baidu versus $100. Like I was kind of warning a little bit in the morning meeting, though, I feel like these Chinese stocks have gotten so difficult to trade. They're just so gappy. Like especially look at like JD and Baba. Ever since they've had those Hong Kong listings, these names have become much more difficult to trade. So unfortunately, I'm not surprised to see that this Baidu ended up doing nothing all day, because that's what ADRs do. And the reason why I used to love trading the Chinese companies is because they were only listed in the United States for years. And that meant they basically were trading as American companies, even though they were Chinese companies. But you didn't have the big gaps. So the reason why I don't like trading ADRs is because they're usually so gappy. If you just type up, I don't know, Vale or Toyota is a good example too. You get all these gaps, and then the intraday price action becomes very muted because Toyota is really trading as a Japanese stock, and the Chinese stocks, it was actually never that way. They would trade very fluid. They were really good trading vehicles for a very, very long time, and all of a sudden somewhere here, I couldn't put a date on it, that's really changed. It seems like they trade more with the Hong Kong market and then gap and then have much more muted price action on an intraday basis with us. That makes it difficult. So not surprised to see that Baidu didn't do anything. Neo is one that I got involved in. I ended up down very, very small in it, but kept a little bit overnight. I'm going to just continue to kind of monitor this one the next few days while it's in this consolidation to see if it can break out above 11. Totally Pat's fault. Yeah. and yeah, I guess that's pretty much it. It's pretty much it from today. So happy to answer any questions. Let me take a look here into the VTF. Well, what's that CrowdStrike doing now, actually? Oof, down 20%, $112. Seems like a big down move. Micron getting hit on INTU. INTU is only down 3.25% though, but very, very illiquid. Not really trading after hours. Got a $1.50 spread right now. More than that, $2 spread, $3 spread. And taps down also. Your net app down 12% after hours. I did not see the numbers. Oof. W Day holding in though. This W Day's been such a good stock for such a long time. Obviously got hit pretty hard, just like all these names this calendar year. But for the most part, this Workday has been a great company to be involved in. From Sebastian, hey Derek, today I was looking at Roku. Yeah, we were looking at Roku a little bit this morning also. I was too much of a wimp to buy it. I kind of liked it as a buy today. And I was like, you know what, I think I'm just going to be patient on this one and let the downgrade that came out like wear off a little bit. And Rock got involved, and I think he did pretty well with it. I hope he did pretty well with it at least. I mean, that's a heck of an up move after he got involved into this gap down. I was too wimpy to be involved. Yep, so I had a bad downgrade. It was gapping below daily resistance of 52.80. Assume you mean support. Okay. Had an inside 5 at the open and wasn't really extended. I thought it was a great setup to short, so I took it. Okay. It broke down first. It was a bit extended on that though. It was definitely extended on that, at least based on how I look at extension. You know, when you're shorting the break of the inside 5 here at 51.50 and the ADMA is still up, is over $1 away. It's $1.25 away. That's pretty extended. And absolutely failed and was strong the entire day. Am I missing something? Yeah, I don't know if you're missing anything, to be honest. I really struggle to short, and this is where my personal bias kind of comes in. I really like Roku long at these prices. This last earnings report was abysmal, and look at the way they bought this thing up. If they're not going to bring Roku down at these prices on that last earnings report, I don't think that they're going to bring Roku down. And I think that at these prices, you're just really looking at a buyout target. And that was I read some of the language that was on that downgrade today about them losing market share, whatever. These guys own the rails. They own the rails for streaming. And I was bearish on Roku forever because I just didn't understand what advantage Roku offered as far as, you know, being the device that you need to use to get to any of your streaming devices. I just didn't get it. I was like, why, you know, fine, Roku's better, but anybody else can just make an equally good operating system. It can't be that hard. Well, it is that hard because no one else has been able to do it. Like when I go to like my dad's house, got like the Samsung operating system there. It just totally stinks. Like all the other operating systems I've seen or used for TVs, they just don't compare to Roku. And on top of that, I just see Roku more and more and more and more. People have the specific device. Even I have one now, or they have a TV with the Roku built into it. And now they got that partnership with Walmart. If that partnership with Walmart goes well, Walmart could buy Roku. Netflix could buy Roku. And I think it's at prices where it makes a lot of sense for a company like that to come in and do it. So I really struggle to be short this stock. I actually want to be long it, even though I'm not in it right now. Thought about even buying it this morning into that gap down, wimped out on it, and it traded well. But I don't think that you're actually missing anything. I think that if you want to just talk about pure technicals, that your thought process was right. You have a stock that has bad news, it's gapping down to below a support level, and you're looking to punish this thing and short it and, you know, get continuation on it. And they bought it right back up in the exact same way they did on the earnings report. The only thing I would point out is that I do think that in your trade, the stock was extended, which is still okay. Because you're looking at a news event here, and that's when the momentum can really come in and really, you know, have an extended stock become more extended. So I still don't even hate that, but I do think you want to recognize the extension there. But otherwise, I think, you know, pure technicals, your idea is correct. But that's why we have risk management in place, right? You put your trade on, the market said, hey, we're buying this up, and you get stopped out and you move on. So. From Rex here, while I was watching Tesla at 10:10 a.m., Tesla breaking up a little bit there. Tesla had interesting pockets of relative strength today also. While the Q made a new low, but Tesla wasn't. I was thinking to go long through 184. Okay, I again like all this thought process of recognizing the relative strength on the intraday. However, from the 5-minute candle and yesterday's daily candle had me hesitate that Tesla won't go too high. I also appreciate that hesitation. If you look at the daily chart on Tesla, it still looks atrocious. What this trade has on its side, if you're looking to go long Tesla, is relative strength from yesterday and some relative strength today. What it has against the trade is the daily chart is atrocious, and in my opinion, the stock is still extremely overvalued. I also took a trade on. Oh, do you think it was do I think it was a risky trade? Well, I don't want to get too much into semantics, but we got to talk about the difference between a risky trade and probability, right? To me, when you say risky trade, it means that you're putting on a lot of risk, a lot of dollar risk, or you're giving a wide space. So was it a risky trade to buy through 184? Did you have to give it a lot of space? Yeah, you probably have to give it down to 182.30 to trade it right. So $180 stock that can really move. I wouldn't say that that's a ton of risk, but I wouldn't say I would prefer to have smaller risk myself if I was getting involved in it, but that's sometimes what Tesla gives you. So you had to, really risk like $1.70 in this thing, I think, to take that long trade, which is another reason to not take it, honestly, if you don't think it has good probability, which is the next part of what's worth talking about. So, whenever you're assessing any trades, and this has been my difficulty with this current market environment these last handful of days, is you're always trying to assess how many pieces of the puzzle of probability are on my side of the trade. And the more of them you have, the better the trade is. And this entire market environment we've been dealing with, not just with Tesla, but with the SPYs, with the Qs, with where we're seeing inconsistent relative strength and relative weakness, with how the VIX has been trading compared to how the market's been trading, take your pick. We just haven't had everything really line up for us, I don't think, since the CPI day, and maybe arguably this gap down day on the 17th was a really good day to kind of get involved. We also were pretty good at picking this day for continuation also. But for the most part, this price action in here has been really difficult because of the competing pieces of probability. And that's what you're looking at with Tesla. This Tesla daily chart looks terrible. You have this upside tail into the equilibrium area and a downtrend in a stock that I think is still overvalued. But the flip side is you had relative strength yesterday. You got relative strength this morning. You are buying it on the way up. I like that. So this just then becomes a trade where, and is the market on your side? No, the market's not on your side either. So this just becomes a trade where you could take that trade, but you probably don't want to risk your day in it. You probably don't want to be putting on like A+ risk in it. Or you say to yourself, hey, you know, if I could get in this and the spacing risk on it was small, I would put a little bit of risk on this. But to have to give it $1.70 worth of room when I have a bunch of layers of probability that are against the trade, I'd rather not be involved in it. So I think that's kind of how you think about it. And then if you decide that it just wasn't worth it at all, I can get behind that. If you decided that it was worth a little bit of risk, I can get behind that too. If you decided it was worth a lot of risk, I can't get behind that. So I hope that helps. You also took a trade on NVIDIA on an oversold bounce. At 11:15, I saw the Qs accelerate. Okay. Yeah, this is when the market was getting extended, and that's what we were looking for, was an extension bounce right around in this area. So definitely the right idea. You saw the Qs accelerate to the downside, and NVIDIA wasn't. Well, NVIDIA also had a pretty big down move here. And giving an inside tail before the 11:15 candle formed. I don't know what that means, inside tail. Giving an upside tail, sorry, an upside tail before the 11:15 candle formed. Okay, I don't see it. Turns out it went one simple on my stop loss and back up. Do you think I should just wait for NVIDIA back through 160 to go long on this trade? Were you the same person, 160? Were you the same person that got shaken out of a trade by like a penny yesterday that was asking me about this type of thing? And I said, you really just want to make sure that you have the signal. Like, so NVIDIA to me is not showing any relative strength to the Qs. To me, NVIDIA looks like it's trading the exact same as the Qs for the most part. What I like about the QQQ candle is that you have the extension and then you have the shape of this candle coming in. It's like very clear. You buy versus this low, and I'm pretty sure we communicated it as a team. Now I understand looking at stocks with the market, because that's a lot of what I do. I will watch and see that signal in the Qs, but I don't buy the Qs. I buy Apple or something. And it looks like it to be what you're doing here, but I still want the stock to have the signal also, because the Qs kind of gave that signal. I don't really see it in the same way in NVIDIA, unless maybe you were just going long with the 11:10 candle. What's the actual low on? Oh wow, that's here. It's 10 minutes later. It's 10 minutes later, so I guess there was a little bit of relative strength on this last leg. Yet this still ticked a new low at 11:20. What's this low candle? Oh, that's the 11:20 candle also. So if you waited for this candle to actually prove itself and you bought NVIDIA, you don't get shaken out, I don't think, because this low would already probably be in, and you'd be going long versus it. So Rex, I apologize. I don't fully understand the entire dynamics of the question on the trade, especially because I wasn't involved in this one. Usually I can kind of figure it out by just looking at the chart. I do see the relative strength now, though, on this last leg down that NVIDIA did not give when the Qs gave. So I like that. And as I look at where the Q low is and look at where NVIDIA's low is, I don't see why you would have gotten shaken out of it unless you bought just a little bit too early. Like you should be going long NVIDIA after the Qs put in this low, after this candle is either closed, or maybe you're cheating on the close of the candle by getting involved a little bit early, and then you're kind of catching that up move that comes in. Same thing with NVIDIA here. I would say broadly, so I was speaking on the phone to an excellent, really experienced trader that I'm trying to bring into the company the other day. And one thing that he was saying that has changed for his trading, that has made trading more difficult, and I thought he nailed it pretty well actually on what he described, was that he was like, it used to be that I would know where a stock should pivot, and then that higher low would be there, and I would just be able to go long or short versus it, and I would get paid. And he's like, nowadays, I still know where the stock should pivot, but it's very hard to use that exact same spot. And I need to, like, really be able to kind of be in it and watch it in that area, and that sometimes that causes me to risk a little bit more than I would have had to risk otherwise. And he doesn't have a good solution on what to do on the specifics of not having your stop loss at that specific spot, because you still have to have a stop loss, you still have to have risk management. But I thought he nailed that really well, because I seem to do that myself for my own trading, and it's still right a lot, where, you know, the high is the high and the low is the low. I think it's right often enough where the risk reward makes sense. But there is a lot of times where that period, that area just becomes a little bit shaky of an area, but the area holds and then actually works properly. I know that doesn't help you, but I'm just, you know, kind of thinking out loud based on the conversation I had with a really good trader that I'm trying to get into the team. So I broadly like your thought process. I don't fully understand why you got shaken out of this NVIDIA trade if you timed it properly with the cues. What I really like, to give you a compliment though, I really like the way that you're thinking and looking at stocks in the market. I love how you're really focused on what the market is doing in conjunction with the stocks that you're looking at. You're looking at all the appropriate layers of probability and you're trying to execute on it. And if you're the same person from yesterday who also got shaken out by a little bit, I don't know what the solution is for you. Or maybe it's just, you know, we work on a game of probabilities and you just happen to be on the wrong side of the coin there, where you got shaken out by a couple pennies 2 days in a row on what were otherwise really good, really thought out, and well executed trades. Or maybe you were just a little bit too early on this one with where it was with the cues. But I generally think you got the right stuff going on and the right thought process going on. I would just say stick with it and keep that up. From Sebastian, do you know what happened? Yeah, that was the headline we mentioned for Apple at 11:05. If Pat's here, he can probably tell, but I think it was somebody came out and said that they might be 20 million iPhones short or something like that based on everything that's going on in China. Oh, there it is. Pat already posted it. Apple vol downtick on circulations of comments from Ming Chi analysts. The total iPhone 14 Pro and 14 Pro Max shipments will be 15 for Q4 will be 15 to 20 million units less than expected. Significant downside risk to Apple and iPhone supply chain due to Zhengzhou iPhone plant labor protests. Fun fact, I've been to Zhengzhou. Cool. Mark saying usually very, very tied to the cues. From Cameron, for those double bottom setups, I like to wait for the failed breakout breakdowns before entering. Yeah, I get it. I think it depends a little bit on the stock that you're trading, but for the most part, that does seem to kind of be the right move these days. Is you wait for the shakeout and then you get in. It just makes it much more difficult, obviously. Certain stocks, I still find that Apple tends to trade very clean and really respect its technicals and not necessarily shake out and holds the spots that you expect it to hold. But others certainly do not. Most others probably certainly do not at this point. Cool. Anything else, guys? Almost 5 o'clock. Honestly, it was a very, very slow day today, very slow afternoon. So if no one has anything else, I will wrap things up. Okay. All right, so let's wrap it up. Powell speaks tomorrow. Hopefully that, you know, improves this market environment. I found the last couple of weeks here to be pretty tricky and pretty difficult, as we've just been waiting for the market to kind of resolve the areas that it's in, and we just haven't had that same, you know, everything kind of lining up for the picture to give us high probability situations for our trades, which is fine. You know, you enter these periods of time sometimes, and, you know, you just got to be a little bit more selective and, you know, try to make a living out of yourself and find those geos like we had today, which was a great trade. And then, you know, the market will improve again with time. So have a great night, everybody. We'll see you all tomorrow.